Good afternoon, MMTs. We have a position again on the 7/19/2014 1900 put on that S&P 500. Now, we've already banked considerable money off of this contract when we were buying over here, and we have it live, but we were buying over here at around 40 some dollars, and they popped that thing to $60 right here. Now, this is the actual put chart available. We only have 8 contracts right now. Before we had 15. So basically what we're doing is we're going to scale this up higher. The last print was 51.65. The 8 contract value was $4,700 on the close, but intraday it was up around $6,600 on that 1900 put contract. Now, this is the value of the put chart, and 99.99% of the people out here that like to trade options, what is it? They've never even seen a call chart. They've never even seen a put chart. They've never been able to correlate that this contract for us is going to go up to considerable highs. Yes, right over here at $77 is where that contract started out. And let me tell you where it was. That was on 3/28 of 2014. That's where that contract was. It was actually even higher. So let's just call it $83. We were buyers down here. They've gapped that thing up. And so the volume is only 23 contracts. We own it. We are the minority holder in it. We know exactly where this is going to go relative to what? This S&P 500 put chart. I just showed it now. Let's show you here why the S&P on a daily level is about ready to smack and take that 50-day simple moving average out, and that down here right above that 1840, this is a 100-day simple on that S&P. Yes, we are running across a major support level in hand, and yes, the premium betas that go into these S&P put options these days are not like what they were during our whole life of 30 years of trading, and they've had options around for a long time. They were never, the public never, back in those days, you guys were never, the only institutions used options. Let's just put it that way in a nutshell. That's the 50-day. I am saying that this is the $1,900 put that we own. I'm also going to show you another put that we own. And we have 7 of the 1850s. That is a September 30th. Now, the value of the last print is 53.5. The value of the close is $1,900. Good. And yes, it had a range of 5.8 as far as the range on the 1850 September, but the July 1900 that we own only had MMTs a $1.65 range. And we've got record high bets being bought. Those are the 2 contracts that we own right here and right now. And net, we're going to be adding more to it. There's a time to get paid with the least amount of volatility, and we understand where that S&P rally went, and we understand how long that this support level up in here has been, and we know that once we crack it, we're coming right back over here, and we undercut it right here during this time frame. And what day was that? 4/11, April 11th. April what? 14th here, there was a weekend. And what? April 15th. That was your 100-day simple right here as far as the daily goes. So basically, we are going down here this time around, and we know that that 1820, slightly below 1820, is where that would go. That's going to make these put contracts worth a lot of money. And when I say a lot of money, I'm saying a lot of money, period, at the end of the day. This is live. The trades are live. Everything and all the analysis were done where? Let me show you where. Here you go, stockmarketfunding.com. All you have to do is type in S&P 500 in a search box. That's all you have to do. We have a lot of brand new traders that are coming on this stuff that are going to be getting with us over the next couple of months. And I'm just going to give you guys a screenshot of where you can go. And everything is right here related S&P 500, S&P 500, correction, puts paid already. That was a $20,000 trade on that. And you click on it and you can see it. And that was live, and here's that same trade, and that's what you need to do. And what we're saying again is that we're going to get paid more, and we are. And you can get involved and do the searches for the new people that is coming on board on Thursday and Friday. I haven't got to know all of you personally, but in the market making division, we do trade these indexes, and you can go through the videos here and you can look at all of them that are related to the S&P 500. And they are. There's some other stocks that were in here, but just go ahead and do that. For the new guys, we will be giving these alerts out and these entries out to you moving forward, and that won't probably be till next week. We know there's a lot of you coming on, and so here's the thing. For everybody that wants to learn about the S&P 500, it's all here, and it's done before the fact, not after the move. No, you have to own it, and you have to know why you're owning it, and then you got to know that you're owning it at a wholesale price, and then you have to understand what a call or a put chart relative to the index is about before you can even do anything, if ever at all. Period. At the end of the day, so. We're very well diverse in this damn thing, and that's our ownership. Again, the same one that we made $20,000 on, we're doing it again. This time it pays more. And the September put option that I showed you pays. What I am going to do right here, right now, in this very same video, I'm going to go over through some of the open interest. On the July 1850 put, they traded 73 contracts right here, right now. And you can see the value of these right now. And not only that, when I throw that 1850 in here, and I'm going to put it in that chart right here, right now, and I'm going to talk about how we get wholesale. And we're going to talk about everything that you would love to do, and even the old guys that have been around a long, long time. That was $70 up there, and I am going to tell you that the bull and bear, and that this is wholesale down here. And listen, they're right up here at $50. We're going to be a big player here at the 1850 July. We know where the last support levels were. We're just going to let you know up front, right here and right now, what this is about. And not only are we going to, down here, we already know what the open interest in the day volume was. Now, let's go over that at the 1850 July, right there, 7,300 contracts, 21,000 open interest traded. Now, what we're going to do is we're going to go back down here below the market. Now, on the call side, listen, there's a lot of contracts on open interest on the call side. The call side got marked down today on that 1850 on the call side. So let's take a look at that in the chart of the 1850 call. Now, listen, these people were just up here at $70. And you know what's going to happen is this call is going to go straight down to nothing. When it gets down here to $10, they will buy the other side of our big winning trade. At that time, we as market makers know when to buy the other side of our winning trades. And that's getting net long against the big short that is working. So once again, this has got a long ways to go down. And this is all July contracts for right now. And I will be covering some other ones that have huge open interest. What I would like to show everybody very carefully is what is below the market in the July contract. You had day volume traded at the 1715 put option. Yeah, you did. 5,000. Yes, you did. 1710 below the market. The last lows, we were close to like 1737 in January, and you had big day volume traded. 36 open. 4,000 back at the 1700. All of July. Oh, yes, all of July. And those 2,200 down here at the 1650. But look at the value of these. $214 on the call side. Look at the value of the call side. This value is going to change hands at certain strike prices. This contract at the 1715 is $159. And guess what? No wonder they bought 5,000 of them down here at $5.70. They're cheap. They're deflated. That's the other side of that $159. What value? And the open interest there at the 1725, that's $150 on the call side, $7 on the put side, all for July. And guess what? You are going to see some fireworks for 4th of July. I promise you. Now, what you're going to do for the new guys, there's a bunch of you. And what you're going to do is you're going to go in here and you're going to look at the strike prices. When our video production guy, Brian, gets back tonight, he'll upload these where they're viewable for you. And then via your particular group I will be posting over there during the day on the S&P for the July. And I've covered it where that put to call ratio spread is, yeah, open interest at 1925. Buddy, there's 20,000 contracts up here at 1925 above the market. Let's take a look at some of the other ones that have 29,000 open at the 1875. The ratio, how about this one? 36,000 open at the 1950. Well, listen, those are going to go worthless, zero. And we have time. Remember, we have the rest of May and all of June and 3 weeks of July going through that July 4th holiday, and you're going to sit down and you're going to eat one of the best barbecue 4th of Julys that you've ever had, because somebody's going to get barbecued, and that is somebody else, and you're going to be on the other side of that wonderful barbecued, and you are going to get paid right away. Now, I'm going to be covering some other ones in another video, and I'm going to be going out to the June contract, which is a monthly expiration. I am not going to go through the weekly ones today. No, we'll do that a different day, as we will.